Okay, guys, welcome to another class. This is the first class of the year 2025. You guys see, today I decided to stand. The reason why I'm standing is because I want to make sure that everybody get the vibe. Yeah, basically, and I want to make sure that I teach people on how to actually come into the forex space. Many people don't really know anything about the forex space, and I said to myself 2025 that I think it's time for us to onboard people into the forex space. It's not really nice that we have the OGs and people don't really still have information about how to be profitable or how to even enter inside the forex market. And that is why you are in this class. So you're in this class to actually learn what forex is and actually see how to make it a skill for yourself in the long run. So this class is going to be a lucrative class, and it's going to be a class that's going to worth your time. So try as much as possible to be very attentive. One of the things I should tell people is that the first step to becoming successful is for you to dedicate your time to whatever craft or system you're about to do. Okay, so you try as much as possible to plan yourself when you plan to succeed, or if you don't plan at all, then you plan to fail. But when you plan to succeed, then you tend to succeed. Okay, so that is why today you being in this class is not a coincidence. We're going to be talking about some basic stuffs, and I actually wrote the basic things that I said we'll be talking about that I think you need before you can even go into forex at all. So I wrote them down and I'll be reading them out for you guys. Okay, so the first one is exactly what forex is, then the advantages and disadvantages of forex. Then we'll talk about some of the apps that I told you guys to download. If you have not downloaded the apps, please go and do so. We'll talk about the apps, and if you don't know the apps that I'm talking about, you should go to the WhatsApp channel. I posted all those things there. Register as I'm talking to you right now. Go and register on the links that I sent there. Register, do all the needful things, and yeah. So trading view and MetaTrader 5, we'll talk more about that. We'll talk about broker, we'll talk about leverage, we'll talk about lot size, we'll talk about pips, and we'll talk about margin. Then we'll now talk about chart patterns, we'll talk about candlesticks, and we'll talk about resistance, support, trend lines. I think those are basically the things that you need in this particular class, and those are the things that will actually make you to become a successful trader if you can focus on those things. Sorry, I'm tilting to this side. This is where my camera is, but sometimes I'm looking at this side to see the number of people that are coming in, and also to be seeing if it is still loading so I don't get to start talking to myself alone. Yeah, so let's go straight to the real deal. What is forex? I'm going to be telling you some things about forex that you think you know but you may not know, and I want you to make sure that those things stick to you. Now, forex means foreign exchange. Okay, that's forex is like the abbreviation word of foreign exchange. Foreign exchange. You can see by my left here we have the board. So just in case I need it, I'll be using it to explain some certain things for you guys. But forex means foreign exchange, right? And what does foreign exchange mean? Foreign exchange just means the exchange of one currency for another currency. Before 2024, 2025, before the early 20s, before the early 20s, right? People have actually been trading forex, even in the 19s, but they are not trading. They were not trading it as we were trading. What they were doing is they were capitalizing on the fact that they needed to exchange one currency for another currency to make money. So somebody thought about it that way. Every economy has its advantages and disadvantages, and when one country has one advantage over another country, obviously the value of the currency of the country that has an advantage will be doing better than the value of the currency of the country that does not have an advantage. Let's use, for example, Nigeria. Nigeria is a very big case study. In Nigeria today, $1 is equals $1,700. Before now, $1 was actually £1. And then now imagine if somebody traveled, though it's a very long time, but this is hypothetical speaking. Imagine if somebody traveled to US, Before you go to US, you have to change your naira to dollar, and $1 was equals to 1 naira. Let's assume you change $100. You change, or let's assume you change 10 or $1 million. $1 million is also equal to 1 million naira in one time like that in Nigeria. Now, on getting there, the person starts checking the chart checking what's happening in the country, and found out that Nigeria is going through a lot of shit. Okay, the value of Nigeria currency starts going down, and all of a sudden, since it is going down, the person starts preparing to come back. When the person comes back, it becomes a big man. Why? Because it took him $1 million then, but the $1 million is bringing today is equals to 1.7 billion naira. Now, what happened was that the value of the currency he took above or took abroad started depreciating, and because of it has depreciated and he has changed it to another currency, the currency has changed it to become stronger than this former currency. So when he comes back, he makes a profit. So people started doing this, but there was a lot of things about, there's a lot of craziness about this, because some people, that's one of the motive of terrorism. Let me explain why. When people started doing this, someone said, okay, since it is, the whole idea is just to make sure that one country is not doing better than another country, why don't we just go and attack a country, destroy the stocks or destroy the forex market, whatever, make sure that the value of the country assets depreciate, and we buy the assets at a very cheap price, and when it depreciates, but for the exchange all our assets from the assets was changed to another currency, we make more money. So that's why you will notice it that some of these things, some of these terrorism acts, right, are caused in order for it to make sure that things are not working as it should be in some countries. In the US today, people are not allowed to trade as you and I have the privilege to trade. The reason why people are not allowed to trade is because, sorry for my voice, the reason why people are not allowed to trade as much as we are allowed to trade in the US is because the US has power and they control majority of the things that happen in the foreign exchange market. We have somebody called the Federal Reserve Chairman, Fed Powell. He's one that has a say over the affairs of CPI. CPI means consumer price index. It's a fundamental news in the market. Now imagine if you are somebody that can control the market to either go up or go down. What would you have done? Many people could have taken that as an advantage for them to say, okay, since I have the power to say price should go up or go down, why don't I just say something bad and I sell and price goes down? You understand? People will look for motive to make sure that they destroy the US dollar. So that is why there were laws governing the US dollar saying that people should not trade, because they know people can just decide one day, since US dollar is the strength, why don't we just start bombing everywhere? If there is a major bomb blast in the US today, US dollar is going to crash, and every other currency pair like GBP USD, which means Great Britain pounds versus the USD dollar, will increase because the USD has depreciated. The GBP is going to increase. Many people will start valuing GBP over USD. That is why, to avoid unnecessary troubles, they have to now curb the influence of people and make sure they don't trade so much. But it doesn't mean that there are not traders in the US. We have traders who even, some of them even have inside information, but they must not show people that they have inside information, if not, because it's illegal. Now, what do I mean by inside information? Inside informations are those secret informations telling them that, okay, there's a certain amount of money that's going to be pumped on the commodity gold. There's going to be some levels of gold that's going to come in, and this is the particular time when it's going to come in. Mainly it comes in, people are already positioning themselves. Some people are positioning themselves to buy. Those people are called insider traders. They have secret information, but there's a certain limit to the amount they must make, because suspicious activities can be located to them. So what is that forex in general? It's just the exchange of one currency for another currency in expectation to make money. For us, that's our own definition. But the normal definition is just exchange of one currency for another currency. Foreign exchange. Foreign exchange. There's a transaction going on. So, moving on. What are the advantages and disadvantages of forex? I'll talk about the advantages and disadvantages of forex. Then from there, I'll now move into the type of forex analysis that we have. Don't worry, we'll do small of our. I'll show you guys some analysis here, and hopefully you guys key into it and learn one or two things from it. Now, what are the advantages and disadvantages of forex? I'll start with the disadvantages. The first disadvantage of forex is that if you enter into the forex market without proper information, it tends to destroy you. Let me explain. You just heard about forex and you wanted to just enter forex. Immediately you entered, you funded your account, and you follow the set of people that used to say forex is gambling, forex is gambling, forex is gambling. So you too, you said, since forex is gambling, if I see a candle going up, let me just buy. If I see a candle going down, let me just sell. You know what that is doing for you? That is setting yourself for failure, because you will surely fail. So that will destroy you emotionally, that will destroy you financially, and there is no headway. Meaning, if you keep on doing that, you are not going to be successful. Nobody should deceive you, except if maybe there's one luck on your side. And there's what we call beginner's luck. If you're not careful, you can get stuck into a beginner's luck. So if you don't have the proper knowledge into the industry, forex will destroy you. That's number one. That's why you hear old people saying, don't go into forex. Forex is scam. Forex cannot make you successful. Forex is a lie. Forex has made me successful. And I'll tell you why forex made me successful. Last year, 2024, I did something that actually shocked the industry. Now, what was that? I've always had this conception of forex is a scam, forex is not real, forex does not give you money, forex is this, forex is that, forex is that. I said, okay, if people are saying this, let me open a new account, or let me use one of my old accounts. So what did I do? I took my phone, opened an account, and I opened a Twitter account. And I said, one of the vast places to actually show that something is real is where people can, as you are posting something, people can comment and attack you, which is on X. X is like a free space, unlike Instagram, where I can easily control the comment section. I can tell people that I can go to the comment section when people are saying nonsense. I try to block them or try to restrict their comment. X is a free word. Anything you say, people can use against you. You know. So I said, okay, to prove that forex is not a scam, I opened the account. The account was less than 1,000 followers as at that time. January 2024 to be precise. And I said, from now on, every of my trades, I'm going to be posting it on X. You can go and check it, so you should not look as if I'm capping. Every of my trade, I'm going to be posting it on X at entry level. Meaning, before I enter, or immediately I want to enter like this, I'm posting it. So I started this journey, I started posting it. Entry at entry level. First week, people are saying he's just lucky, doesn't know what he's doing, he's just lucky, maybe, let's just see. Second week, oh, this guy is making loss. I told you he's making loss. Third week, it was still profitable. So, first week was profitable at the overall. Second week was profitable. Third week was profitable. Fourth week was profitable. And I said, maybe he's just lucky that 1 month came and went. So, let's see how he's going to do in February. I repeated the system. I did it every day. The followers started coming up. 1,000 followers. And one of the hardest platforms to grow is X. And also one of the hardest places to get followers is when you have so-called financial world. You know, as a financial person, people tend not to follow you because they believe that this person is just capping. So because people are still trapped in the matrix. See, the government doesn't even want you to learn what you're learning now. That's the truth. Nobody wants you to be successful. Everybody wants you to follow the system. And I understand why. Out of the whole total number of people that are listening to me right now, 435 people listening to me right now on this live stream, I can tell you that maybe just 10 will take this thing serious, all this thing serious. you may be the one. But majority of the people here is not going to take it serious. And why? It's because people are programmed to follow that rat race. People are programmed to follow the rat race. You wake up, you go to school, you go to school, you go to secondary school, go to secondary school, go to university, get a job, sit down in the work, money 9, stay 5, come back. You don't have time for yourself. You go back every day, do the same thing, repeat system. 60, you're old, you collect pension, you move. The next thing, you use your pension to buy maybe something for yourself, and boom, person dies. Repetition. To the point that if a child comes out with talent and says, Dad, I want to go to this, is what I want to become, this is my dream. The dad says, never, you will go to school, you must do this, you must do that, Why? Because in as much as dad doesn't even know, the dad is in the rat race and is trapped in the rat race. That's how the economy was programmed. So I'm not going to be surprised, and I'm not missing words when I say less than 10 or maybe just 10 people, and you may be the one. Less than 10 are going to take this thing seriously. But let me go back to the story. So when I started posting on X, people were like, nice. 3 months, 4 months, 5 months is still profitable. 6 months is still profitable. I'm not going to guarantee you that I'm going to be trading every day to make money every day. But I can guarantee you that every month I'm going to be profitable. Most of the weeks were profitable. And we did it. To the point that we even went 19 weeks back-to-back wins. What do you mean? What do you think 19 weeks means? It means every week in 19 weeks, I was winning and I was showing people that it is possible. At the end of the year, we closed the account with 46,000 new followers on the account that was less than 8,000 people. Telling them on X that you can actually become successful trading the forex market. This year we started again, and I posted my first trade yesterday. I made a loss. Today we made profit over 120 pips. Don't worry, I'll explain what 120 pips means. And we'll keep pushing, and overall you see how far it is going to go. So the disadvantage is that it wastes your time if you are not somebody that knows how to plan very well. Another disadvantage is that it can disrupt you with your family. Remember I said this is a struggle to leave the rat race. So if you are trying to leave, they will always pull you back. And when people see you as a different person, what happens? Fight. People start getting angry at you. Back then in 2020, one of my uncles told me and said, Dayan, this forex that you're about to do, you're a man, I'm a man. I'm not doing this because I hate you, but you're not going to be successful trading the forex market. It was when I started growing that I understood what he was trying to do. It was not as if he's a bad person. He's a very good person. I love my uncle. Trust me, I really love my uncle. But he told me that you cannot be successful in the forex market. Why did he say so? Because he felt it's looking too good to be true. That's one. Two, he felt, can you tell me that just knowing when to buy and sell will give you money and all those things? And he said one of his friends that he knew went to the forex market and the thing crashed him and everything. So I didn't blame him because he was actually looking for the best interest for me. But long term, 4 years later, he told me, he said, I'm happy and I'm proud of you. And I'm happy that you stick to what you thought was best for you. Do you get it? So forex can actually change your life. Forex can give you the freedom. Personally, I have the freedom I want to. I can go anywhere I want to go to. You can travel. 2, I get paid conveniently compared to what any work in my current country. I don't know where you're listening to me from, but in my own country, I get paid conveniently. Forex can also make you build quality family. Why? Because if, for example, you're not dependent on any boss, or you're not dependent on anybody, you have time for your family. Majority of the reasons why many children go AWOL is because their parents are not there. So they just go to one nanny, to a daycare, to this, to that. But imagine you have a family where you work from home, you make enough money that people that are working in as CEOs in companies don't even earn, and you can travel anywhere in the world with your spouse. You have time for your wife, you have time for your family, you have time for other businesses. Yeah. Like I said, not everybody in this class is going to want to get to that, because it's not easy to, trust me. As sweet as the journey is now for me, it wasn't like that. 2 years I was not making anything. Because I was not learning the right things. I was learning on YouTube, learning this, learning that, and so 2 years was hell for me. But fast forward 4 years, going to this year, I'll make my 5th year trading. I can say confidently that it was the best decision of my life. You understand? So that is for that. Then moving on. So now that you've had the advantages, you've had the disadvantages. If you are still here, then it means you still feel like this class was meant for you. So the next thing we're going to be talking about is how to trade. Before we even talk about how to trade, I would like to talk about the type of analysis that we have, the tools that we are going to be using to trade. Remember, I told you guys that you guys should go and, if you guys can remember, told you download MetaTrader 5, TradingView, all those things I said you should download. We'll talk about them today. Okay? Yeah. So number one, types of analysis. We have 3 types of trading analysis, and I think this one will enlighten your memory. For those people that are saying that forex is gambling, this will enlighten your memory. 3 types of trading analysis. After this 3 types of trading analysis, you can now choose, okay, is forex really gambling or is forex not gambling? Because me, I don't even care if it's gambling or not, as long as I'm making money. But I know if I put my money into betting, I can't be sure of it coming back, but I can be sure of me putting my money in the forex industry and sure of coming back. So I don't know if what I'm doing is still betting, but let me explain these 3 things to you. Number 1, we have technical analysis. Number 2, we have fundamental analysis. And number 3, we have sentimental analysis. Now, let me explain. Let's start from sentimental analysis. Sentimental analysis means the kind of analysis that comes from emotions. Today I feel like gold is supposed to buy, gold is supposed to sell. That's called sentiment. That's your sentimental analysis. That is the one that people used to say it's gambling, actually. Because you didn't do any proper, you just felt it should buy or sell. So you are taking high risks. You're taking high risks. And now, note this. Everything in your life is actually risky. So if what I'm about to explain, you still feel it is gambling, then it means you're gambling with your life too. Because me coming to this life and in a country where I know that the power supply is not so strong, it means I'm taking risks that there'll still be power till I finish this class. Though even if there's no power, I'll switch it off. I'll change the world. But it's a risk. That's one. Me talking to you is a risk that I believe that this house I'm staying is so strong. But the risk is little because the people that built this house built it properly. I believe they built it properly. Like, it will not crumble on my head. But I've heard stories of people having house and they crumbled. So I'm still living a risk. Me holding a device that can transmit from this point to wherever you are to over 400 people at the same time, meaning there's something that is actually things, I don't know why I still feel it's strange. Like, you can just be somewhere and everybody's in different aspects of their houses are listening to you. I'm sure if they told my great-grandmother about this, she would freak out. She'll think it's witchcraft or something. But it's a risk that, it's a risk. Everything is actually a risk. Me eating and believing that it will digest well is a risk. But the risk is minimal because I believe that the chef that cooked it well. I get it. So now, sentimental analysis is now when you just believe that this is how the market looks like. I feel it's time for us to just buy. Let me open MT5 for you. Let me show you how it looks like. This is an MT5. This is an MT5 account. Okay, let me clear this for you guys. Now, this is an MT5 account. Many people used to deceive people using this MT5 account. To know if this an MT5 account is real or not, as I say, you should download Xness. One, you see this icon here. There's this icon up there. That small icon. Yes. That shows that it's a real account. But some people used to crop it and put now. But anyway. Now, also, you check. This is Kingftp here. You can see. Sorry. This is Kingftp here. Then you will see by this the left here, you see a reel. Now, that reel represents a real account. Mind you, there are many fake accounts, so don't get moved by everything you see on social media. There are many fake accounts there. So, but this is a real account. So I'll be using this to show you guys some things about trading. So now, imagine this is how the market looks like right now. This is how the market looks like right now. And if you go to the middle icon, for those guys that have downloaded trading MT5 or whatever that I told you to download, if you have downloaded it, you go to your phone. If you go to the middle here, right, it will show you balance, equity, free margin, right? Sentimental analysis, analysts, what they believe is, since if I go to 1 minute time frame now, you can see that market is either going up or down. Since it is going up, let me just place buy now. So you can see here, this is your sell and this is for buy. I'm showing you guys how it should be on your phone, so you can go and check it. So they'll just place buy and expect it to just keep buying without doing analysis, without doing anything. Sometimes it works for them, trust me, but sometimes it doesn't work for them. Now, the second type of analysis is the fundamental analysis. Now, fundamental analysis deals with the futuristic part of the market. The market, as you see, is influenced by different things. It's influenced by institution. Which institution are we talking about? The World Bank institution, some major companies in the world. It is influenced by some individuals. Who are the individuals? The rich individuals, not you and I. You and I are still brokies. As long as you don't have up to 1 billion, 10 billion in your account, $10 billion, you're still broke. I'm still broke. You cannot move the market. Okay? So those guys have liquidity. So those guys can move the market. That's 2. Number 3, we have market makers, brokers, and some other people that can manipulate the market. Yeah. So majorly we have people who influence the market. Some people can just say something like this and the market has been influenced. Government officials that can influence the market. So because of all this, that was how fundamental came to play. So fundamental now shows you that I think I'm kind of freezing. Okay. I was sorry for that. I was actually freezing. So, the fundamentals there talks about the futuristic part of the market. Those guys that can influence the market. So, let's assume we have somebody like Fed Powell. I like using the guy because the guy has actually shown me a lot of lessons. You know, Fed Powell can just release a data, okay, before he even start talking, because of the kind of position he's holding, start attacking dollar start attacking. So if he says anything positive about the dollar, probability that the dollar is going to rise, it's going to do well. And if dollar is rising, we have other pairs that's going to go against it. Okay, so now imagine, before he says all those things, we have some data that will get released. Data like NFP, which means non-farm payroll. Please, you can write it down. Go and do your own research yourself. CPI, which means Consumer Price Index. You can write it down, go and do your research yourself. And we have PPI, we have unemployment claims, and many other things like that, many other news like that. So all these are fundamentals. They affect the market. Before you can know that the World Bank is affecting the market, you must read it somewhere now. Yes. For example, recently they said there are newly found gold in China. Those gold are going to somewhere, which is called the reserves. And by the time they go into the reserves, it's going to affect the market. So you now, because you have heard the news, you know how it is going. You're going to interpret the news on how it's going to affect the market. That is why it's called fundamental analysis. I'm not a fundamental analyst to a certain level, but I understand small. But that's not what I used to make my money. What I used to make my money is now called technical analysis. What's technical analysis? Technical analysis deals with the historical data of trading. The other one is futuristic aspect of trading. This one is historical data. What has the market shown? And how do we get the historical data? We get it through the chart. So the market has shown this pattern. So it is expected that it repeats this pattern at certain levels. That's why we now have key tools in the market. Okay, so I've explained the three. So now imagine you knowing that, okay, there's a system that's always repeats itself over time, every time price gets to this point. And anytime you take the trades too, based on those repeated system, you make money. Would you call it gambling? It's left to you. If you have a repeated pattern, like me now, I can tell myself that I boldly tell myself I have 70% win rate to 80%, depending on how the market conditions are. And sometimes I have losing streak. I can just go 5 to 10 trades back-to-back losses. So, but when the wins come, the wins are always so massive and so big than the losses. So would I say that is gambling? So no, somebody once asked me a question. He said, hey, if you know that it's not gambling and you can make money very often, why don't you just risk all the money that you have in this world and put it on one trade? I said, because I don't have 100% win rate and I cannot know the next trade that's going to go against me. I've done something like that before where I funded big amount of money. I'm not going to say it. And I invested into one market, boom, it crashed. The second trade I entered went well, but the second trade I entered with peanuts. So I can't just put all my eggs in one bag. I cannot even know when the losing streak is going to come. So what do? There's something called risk management. Risk management, how to actually maintain your risks, how to have a plan that will. This was a bit above the beginner's class. Okay. Now the beginner's class is to make sure that you are onboarded and you should have the right mindset before you even start trading. Okay, have the proper mindset before you start going into the forex market. So the next thing we're going to be talking about now is broker, leverage, lot size, pips, and margin. Now, who are the brokers? Now remember, I told you we are brokies. We are broke. We don't have money. Yes, we don't have money. The reason why I say we don't have money is because we cannot connect ourselves to liquidity. We cannot connect ourselves to the foreign exchange by ourselves. So we need somebody that can just stand as the middleman. So I can still say we are retail traders. So the person can just come and say, okay, since you are broke and me, I am wealthy, I can connect you to liquidity. But to connect you with liquidity, you have to come to me first. So brokers serve as intermediaries between you and liquidity. Just like how you have your banks where you go and deposit money. You cannot go and deposit money in central bank, but you can deposit money in retail banks, like whatever bank you're using in your country. So those ones now go and put it in central banks. I don't know. But that is the thing, that's just a system, that's how it works. So now, whereas I feel like maybe there are some people that used to go and save money in central bank directly. I don't know if it's possible, but so we register under brokers. Brokers are like people or platforms where we register with, and They take our money, give us provision of where we can trade, and when we trade, we use the broker to make money, withdraw our money from the broker. So the brokers are like, for example, a bank that collects money from you, and the bank tells you, this money I've collected, you can use and buy stocks, whatever stock you want to buy. If it goes in profit, we give you your profit. If it goes in loss, your money is gone. So that's how a broker is. Now the next one we're going to talk about after a broker. And what kind of brokers? We have different kind of brokers. That's why I give you a specific one that you should use. I've worked with 6 brokers in my whole trading career. 2 robbed. Like when I mean robbed, they ran away with my money. There's only one that ran away with money. That one is crazy. Ran away with money in 2024, with people's money in 2024. There are many brokers like that. Every day, everybody is claiming to be a broker. But there's one that I'm using now that has a track record, a huge track record. That's why I recommended it to you guys. So if you have not opened using that one, go and use the link on the channel to open using that one. Okay? Now, you cannot trade without a broker. You're a retail trader. You cannot trade without a broker. So, next one is leverage. When you open your account, just like how I showed you, this is our account. This is the account I showed you guys. This is the account. It's on $7,200. Recently just funded this one. I wanted to use it I want to trade conservatively. I want to see if I trade conservatively, how much I can make conservatively too. Okay, so conservative trading means trading small. Aggressive trading means trading is going hard. So that's the difference. Now, what's the leverage? Now we have $7,000 here, right? Listen to this carefully. A leverage is when, in as much as $7,000 is here, I can risk beyond the $7,000. I'm sure you are trying to think, what is this guy saying? Now, what I'm saying is that the $7,000 that is here, I can have a leverage of 1:100. Meaning, if I can risk way beyond what that 1:100 now means. Like, for example, let's assume I have the $7,000. Don't I'm using 1:1 limited. That's one of the reasons why I'm using that broker. 1:1 limited means if I can open 100 lot size. So I'll explain what lot size and pips means. I think that's what I should explain before I explain leverage, so that you don't get confused. So what's a lot size or what's a pips? A pips is the level of movement or points that the market moves in the market, or that the charts or the candlesticks move in the market. For example, as you're looking at this now, this is candlestick movement, right? To know how many pips this has moved, that is why you need trading view. Let me just use my system so I don't get you guys carried away. Let me use my system. I'll show you guys how it looks like. If you're an OG and you're in this place, you don't need to be here. Meaning, because everything I'm going to be talking about is just beginner stuff. Okay. Let me share my screen. Okay, so basically, this is how the chart look like. We have what we call major pairs. Major pairs are, by the way, this is trading view. So if you have not downloaded trading view, go and download trading view. So trading view is what I use to analyze the market. Remember I told you I'm a technical analyst. I analyze based on historical data. Now for those people that want to actually see if I'm being profitable, I'm just making out or whatever, I'll send you, after this whole class, I'll send you guys the link to my real channel. My real Telegram channel is almost at 40,000 subscribers. And my Twitter is almost at 50,000. My Instagram is almost at 80,000. Yeah, 80,000 followers. So I'll send you guys. One thing I like about my Telegram, one reason why I like sending my Telegram to people is because my Telegram has a proper track record of over 4 years. Over 4 years, meaning you can go to the Telegram and check historical data of over 4 years there and see how I started, the first thing I posted and everything. So that is why I like telling people to go there. So I'll send a link after this whole class. Now moving on, this is trading view. The movement of price from one place to another is called points or pips, depending. For gold is point, but to divide a point to pip, you have to divide it by 10. So let's pick out our tool. You come to the left hand side of the charts. You can see it's showing trend line tools. If I click it like this, okay, it's not here. Let's look for it together. Though I've put it here already, but I want to look for it for you guys from here. Yes, you can see it's price range. The reason why I started it is so that it will be under my chart here. I don't need to go and be looking for it. So let's assume we want to pick from this blue line to this top here. Then mark it as another blue line or black line, depending. I'll make it blue line. This is 920. Look at this number here, 920. What is 920 means is points. 920 points, 920.8. To convert this point to pips is just divided by 10, so it is 92 pips. So pips shows the level of movement of a candlestick in the market. Okay. Now, after showing the level of movement, before you trade, you don't just wake up one morning and just enter the market. No, you have to calculate the amount of money you are about to risk to enter the market. So one of the first steps is first checking the level of movement that you want to see. In the market, we have what we call SL and we have what we call TP. SL means stop loss. TP means take profit. My name or my customized name is Kingftp. What Kingftp means, King that forever take profit. FTP means forever take profit. Okay, so SL means stop loss. For every trade you want to enter, you must set a stop loss. So it is either the trade hits your stop loss or it goes to your TP. Now what that means is that it's either the trade doesn't go to your direction or it goes to your direction. But if it doesn't go to your direction, stop loss means it is about to hold your losses. For example, you have $1,000 and you want to reach just $100. You put a stop loss saying that, oh, okay, this is the point that when it gets to this point, market should take me out. I've lost $100. Rather than it to just be going against me and take all my $1,000 off the market. Okay, but to do that, you have to first check the pips. Now, let's use these two trades for example. This was the trade I took yesterday that gave me a loss. Now, we'll check it together from year to year. This was a stop loss. It was a 35 or 30. Okay, this is 34 pips stop loss. Remember, this is 344. That is 344 points divided by 10. 34 pips stop loss. Now, I risked $1,000 on this trade. No, $1,900 on this trade. Now, risking $1,900 on this trade, how did you calculate it? For 35 pips. You go to your calculator. You click the amount of money you want to risk. Let's assume $1,900. Right? You divide it by the pips. 34 pips. It is 55.8. Now, to convert this to trade, you have to still divide it by 10. The reason why you're dividing by 10 is to make sure you get what we call a lot size. Now, pips is the direction at which, or is the level of movement at which the market has gone in the market, in the candlestick movement. But a lot size is the level of volume you want to use to enter the market. So there are different things. So after you have gotten your pips and you have divided by the number of with your money, you have used your money to divide the pips to give you 55. To get your lot size, whatever you have gotten as the equivalent price, you divide it by 10. So the lot size I should use for that trade is 5.5 lots. So I will now put my SL at that price that the 94 pips stop. Let me explain. Let me show you guys. If I click on it like this, you see this price here, 2633.729. Meaning if price goes above 2633.729, I will lose $1,900 if I enter from this point, which is 2630.56. So from 2630.56 to 2633.72 means I risk 34 pips stop loss. Please write it down. I risk 34 pips stop loss. So from this point to this point, it's 34 pips stop loss. From this point to this point, I risk 1,900. And to reach 1,900, I just calculated it that I need 5.5 lot size. But if it now goes to my direction, I'll get 1,274 points, which is 127 pips. And that 5.5 lot size that I've used for 127 pips, if I'm to calculate it, right, it means that I will get nothing less than 1:4. And that 1:4, how did I get that 1:4? It means I'm getting times 4 of what I'm risking. Because if you draw it from that place to this point where I want to take my profit, which is 2617.96, that is, you can see risk/reward ratio 4.06 means I'm getting 1:4. All these things, it may sound very strange and hard to you, but it doesn't get hard after 2 weeks, because when your money is involved, you get clearer. Your eyes will open, sharp, you have know it. Okay, so this is 1:4. So it means that from this place, if it goes to my direction, I'll get times 4 what I'm risking, which is 1,900 times 4. I'll get $7,600 profit. But guess what? Market did not go to my direction. Instead, it went against me and stopped me out. But today, we have something similar, but in a different version. This one's a buy. Price SL was about 80 pips, if I'm not mistaken. Okay, let's say 76 pips stop loss. This is 762, 76 pips stop loss. Now 76 pips stop loss. If I'm to risk, let's say $1,000 divided by 76 pips stop loss, 13, right? Then to get a lot size, you divide it by 10. 1.3 lot size. Unlike the other one, because of the SL is small, the lot size is big. But because the SL is big now, the lot size is small. So this is 1.3 lot size. But if you enter 1.3 lot size and it doesn't go well, and you put your price at 2642, just know that you're going to lose just $1,000. But if it goes very well, and let's assume this is 1:1.89, though it hits break even for me. This was where I was expecting it to get to. The price did not get it. It did not touch stop loss. Okay, it did not touch stop loss. So I expect price to move to this point. So if it has moved to that point, give me 231 pips TP, and that would have given me $3,000 profit. Okay, so that is just that's just small about risk management and about basics of trading. So we have talked about brokers, lot size, pips. Now the leverage. Because of all this now, you can now have $10, but you are seeing that you believe the market is not going to go against you at all. It's just going to go to your direction once. So you open 1:1 limited. 1:1 limited can allow you to enter any lot, even though it's just $10. But the only disadvantage is that if it moves one step back and you enter one lot, just one step back and enter one lot, you've already lost $10. You understand? One step back and enter one lot, you've lost. So it's not as if you cannot open it, but are you ready for it to just move small? Like when I mean one step, let me show you how it looks like. That one step back. If you go to 1 minute, See, you can see price is just moving small. So as you just move that one like this, your account has gone. If you are trying to buy, but you move one down like your account has gone for that $10. But if you know that it will not move down like that, and you enter the $1 and it goes to your direction, start going up from there, you're lucky. So that's what leverage does. Leverage allows you to open a big amount of money for small equity, small money that you have. Okay, so moving on, so I don't bore you guys. I've talked about trading view and chart patterns. Let me show you. We've talked about trading view already. Now let's now talk about chart patterns. How can you now trade in the market? So at least for a beginner, first thing you should learn first in the market is chart patterns. And I will explain some certain things to you. Chart patterns, resistance, support, and we'll come to the end of this particular class. Okay. Now, after this class, like I said, I'm going to add you to a group. I'm going to send a link. You will join the group. Everything I post on that group is free. You don't have any excuse to fail. If you are going to be part of the 10 people that I believe that is going to be very successful, you don't have any reason to fail. So just join, follow up every day, be a committed person, follow it up every day, and see yourself grow. Okay. So now, let's look at the charts together. All these things you see on the chart is called candlesticks. Japanese candlestick. Up here we have what we call time frames. You get familiar with it over time. Time frames. You have the 1 minute. 1 minute represents 1 minute. If I click on it, I just click on it down. It means for every candlestick here represents 1 minute. But if I click on 3 minutes, for every candlestick here represents 3 minutes. So we have 3 1 minutes inside a 3 minutes candlestick. We have 5 1 minutes candlestick inside 5 minutes candlestick. We have 5 minutes candlestick. We have 3 5 minutes candlestick inside 15 minutes candlestick, and it keeps going on and on and on and on and on. So chart patterns. We have different chart patterns, which I feel you guys should go and research on too. I'll just talk about them. I may not show you guys on the chart because if not, it's going to take a lot of time. And we've already gone 53 minutes of onboarding you guys into the forex space. So that you guys don't get too bored by my statements. Okay. So chart patterns, you can search for chart patterns. You go on YouTube, you can research about it. We have different chart patterns. We have the head and shoulder. We have the double tops. You have the double bottom. You write it down. We have the ascending triangles, descending triangles, symmetric triangle, peanut, so on and so forth. We have them, many of them. I just search for chart patterns. The next one I'm going to just show you, which I feel I should show you guys, is what we call resistance and support. I'll show you just the ground foundation of resistance and support, and from there you want to expand your knowledge. And I'll also start posting at entry level, so you can actually be following everything I'm posting while you join into the forex space. So what does a resistance support mean? It means resistance is for up, support is for down. So by the time we take one market goes up, down, it's expected that market to go up again, down, up, down, and maybe finally it can even break up or it breaks down. Now what does this mean? This up here where market is always respecting is called resistance. This down here where market is always respecting is called support. If I throw a ball in this room that I'm standing, I throw it up, it's expected that the ball is going to come down, right? If I throw it up again, it will come down. If I throw it up again, it will come down. That is what this space is showing. But there's a way, if I do it every day in a particular spot, one place, market is going to break the up or it breaks the down, depending on where I'm standing. If I'm standing on a soft spot on the down, it's going to break that down. So that is for resistance support. So people make profits off this because they know that when market has gone up, it's expected that since market is respecting this zone, market is going to come down. So what do? They enter a sell from this point where it has sold to, where it has bought to. They enter a sell here. Then they put their take profit here. They put their SL here. The second one again, they enter a buy here. Put their SL here. Put their take profit here. Next one again, enter a sell here. Put their take profit here. You know, but it's not as easy as that, but it's something that many people used to use to make money. Now, if I am to do that again for the chart, now, one thing about charts is that charts can never be as perfect as the can never be as perfect as drawings. Okay, let me see. There was one I saw recently. Okay, I think it's this one. Okay, so anytime price goes into this box, it comes down. So if you have noticed it that, oh, okay, this first one came down, second one again went up, still came down. So let's assume that anytime price gets to this box, it will come down. So people can take in trades from here, put their SL above the box, take it to this point where the next box is, wait again. Since this box here too, that's 1, 2, 3, 4, 5 touches. So let's assume it is going to go up from here. Put your SL below the box, and it's going to go up to here. So this is what some people use to make money. Like I said, the reason why it broke above is because there has been touches. So it with the ceiling decided to break and it broke. But you can see this is another way when people used to make their money. So this is a 1:2, meaning if you put $1, you are expected to get $2 and making your capital and everything $3. If you put $100, you're expected to get $249. If you put $100, you get profit of $249, and you will not get a total of $349. If you now enter this one with the another $100 again, you get $218. 218 plus 239 is about 450 something. Plus your capital 100, I said 500. So you're successfully with these two trades, successfully take $100 to $500 if you reach $100 with 2 consecutive wins. Okay, so if you reach 1,000, so you have successfully made $5,000 for yourself, or $4,000 plus, $4,500 plus for yourself. So that is simple thing about trading. So I'll just stop here. I don't want to bore you guys with too much information, but trust me, take trading serious. Start it. Don't get deceived or else you see online. Yes, but trading can really change your life. Trading can buy you your dream Lambo, can get you your dream house, even at a very young age. If you are 18, 19, thinking that trading is not for you, 25, 30, you can still go into trading. Trading can change your life. So that's it, guys. I would have collected a lot of questions, but that's my time. I just successfully took 1 hour of your precious time, or almost 1 hour though, and I don't want to bore you with a lot of stuff. But I would like to hear from you. Let me just see if I can get 1 or 2 persons to ask a question. Let me just see. So if you have a question, just notify so that I can see you. You have a question? Who has a question? Okay. Wow, a lot of people have questions. Okay, what I'm going to do is let me open the broadcast message for you guys. So you guys can quickly type your question in 5 minutes. I will answer the ones I can answer and leave the one that I can't answer for now. I'll just quickly do that now. No worry, I'm trying to open with this my other phone. Last class. Okay. Now let's link it together. Oh, sorry. So I'll post the link now, guys. You guys should go and ask your question. Just drop a question. Let me just quickly answer the one I can answer. So write it out. Join the group, write it out, and let me answer it. Peace out. Will there be another live class? No, there will not be another live class. But they can. I'll be, like I said, I'll add it to a group a channel where you get to know more about forex day by day. This is just like an onboarding class for you. Somebody said, how did you become profitable after 2 years of trading? Did you get physical mentor? No, I didn't, but it's the easier way to get a mentor. If you get a mentor, it's easier for you to actually become successful. What I did was I started learning, and I started doing personal journaling and many other things that I added to my trading stuff. And eventually I saw something that I'm sure that many other people don't see in the market, and that's how I became profitable. Who was your mentor? I don't have a mentor actually in terms of trading. So weird. I actually don't have. I'm somebody that's very knowledge. I read a lot, so I'm a self-taught person. But I have many mentors in terms of finance now. I have them as friends and people I look up to now. But I didn't have anybody that specifically taught me how to trade. Yeah. So, this person said, I want to deal with stocks, not currency. Can I still use the lessons you are teaching? Stocks has its own ups and downs. I don't trade stocks, but I think you can use what I just taught you. So do you trade synthetic? I traded synthetic once, but after learning more about trading, I stopped trading synthetic because I believe that synthetic does not have a base. It's owned by somebody, so it can be manipulated by the person. No, I don't have a mentor. Please explain again about pips and risk management. I can't go back to start explaining. You watch the video if you don't understand. How do we take a prop firm account? You can take a prop firm account actually. That's why you should join that channel too, because you will know more about prop firm. I'll write an article about prop firm where you read. And also you can join the Twitter where I'll be writing things about different aspects of trading, where you should just be reading it and enlightening yourself. Give yourself time, don't rush the process, and you start seeing results. Someone said, please, are we supposed to pay for your mentorship, and if so, how much, please? It depends. For example, after this whole class, I don't pressure people, and you want to pay for mentorship, you feel like, oh, okay, this thing this person is saying is legit, this thing this person is saying is true, and you are on the channel, you have experienced it firsthand, then you can now decide to pay for the mentorship. But don't rush it, just take your time, learn whatever you have learned, digest it first, watch the channel, so you will see the price on the channel. When you want to do it, you do it. But majority of the things that's on the channel is free, so you got it. But when you are ready, so I would like to join mentorship. When you are ready, it's on the channel, like I said. I will talk about it tomorrow morning. So just sleep on it first before you make any decision, and you can join. What's the difference between price action and market structure? The name is self-explanatory. Price action the action that the price is making. What are the things the price are doing? Market structure, direction at which the price is going to, or direction at which the market is going to finish. So no, don't confuse yourself. I can't just keep talking. I've been talking for 1 hour plus, so I can't explain pips and the other one again. How do you cope with trading losses? Well, trading losses is like how a businessman copes with losses in his business, right? Like I said, risk management is one of the most important things. Discipline and consistency too is part of it. I understand that, okay, I have a system that makes me win out of 10 trades. I can win 7, 6, good, or 5, good. So, and the 5 that I'm going to win them at 1:3, meaning times 3 of whatever I'm risking. So if you times 3 times 5, that is 15. So out of 10 trades, if I win 5, it means I've gotten times 15 of what I'm risking. And if I lose 5, it means I've lost just 5. So 5 minus the 15 of what I'm risking in the market, that is 10. I still have 10 times 10 of what I wanted to risk in the market. So it's advisable to always risk one particular amount of money, stable amount of money. If you have a $100 account and you're risking for $5, it's preferable than you risking all the $100, because when you risk all the $100, what's the probability that is that trade that will go well? Understand? So but since you have a system that makes you win 5 times and you have taken $5, you still have liquidity to go again on another opportunity that comes your way. And overall, you make times 10 of whatever you're risking. So $5 times 10 means $50. So you're successfully taking, out of 10 trades, you're taking your account from $100 to $150. You understand? So that way, you start making money. So when you understand, you don't get worked up on your daily losses. For example, when I made the losses today, I was not emotionally attached to it because I understand I'm a profitable trader, so I don't get worked up of the daily losses. I look at monthly. How is my month going to be? Will it be profitable? Will it be in a loss? You understand? So that's the question. That's the answer to your question. Please, apart from MetaTrader and Xnest, please, what other apps do you say we should download, and how do you link them? For example, we have downloaded MetaTrader 5 and registered to Xnest. How do you use MetaTrader 5? Now, when you download MetaTrader 5, let me show you. When you download MetaTrader 5, right, and you want to log in your account, your Xnest account, this is what you will do. You will go to this place called settings. You look at the downside. There's setting. If you're using an iPhone, but if you're using Android, it's still almost the same. Just go to the setting. Then click on the top side. You will see add account, a plus button there. Click on add account. You can see it brought you the list of brokers that I have used before, or the brokers I'm using. You have Xnest, you have Naga, we have Deriv, right? So you click on Xnest. So in Xnest, it will ask you real account or demo account. Like I showed you, I was using a real account, right? So you click on server, real. So whenever you open an Xnest account and you're depositing money, they will give you a login details on your Xnest account. They'll give you a login details. Just calm down, see it. You see login details on Xnest. So it's that login details that you now click here. You click on the server that they gave you. You click on login. You click on login. You click on the password that you use yourself, you set for yourself. You click on it and you log in. So when you do that, it will now take you to this point. Real account. You'll see real, and it's take you. This is a real account, $7,000, and see it here. This is how to show on your chart. So that's it. So that's how to link your Xnest to your MetaTrader 5. It is the only class for beginners. What you can just do is you can watch it over and over again, because I'm going to make sure I compress it and make it like a video where you can actually watch it over and over again. But then, that is why there's a channel where you'll be on, so that you can be learning every day. I used to post every day. There's no day that I've not been posting since for the past 5 years, almost 5 years now. I post every day. Sunday, Monday, come shine, come rain, I always post. So, man, the questions are so much. Was closing the trade today at break even the right decision, or should I have taken profit? See, this is a very beautiful question. Let me explain this to you. You have a system. Follow your system. Don't twist it. What is my plan? I take a trade. When my trade gets to 1:1, I break even. And when it gets to 1:3, I take profits. That is the thing. So if it goes against me without getting to 1:1, I take stop loss. So now imagine if it has gone to 1:1 and now said, oh, it has gone to 1:1, and I take half. The price gets to 1:3. At the end of it all, my 1:3 is not 1:3, it's already like 1:1 point something. Because I'm taking half already before you get there. So at the long run, those win trades that you're supposed to have held long, they're supposed to have held for so long, those wins that you're supposed to have held for so long, you did not hold it. When you are not checking your statistics, you are seeing blues on your trading views, but it's not reflecting on your account because you did not follow your plan. So breaking even was the most beautiful decision you have made. Forget that it will go to your direction at the long run. You followed your plan, that won't matter. Tomorrow, there's always going to be opportunity. You have your liquidity, you didn't make a loss, so that is a very good one. I use the daily time frame for market structure to check where the market is going, and I use the lower time frame like the 1 hour, 15 minutes to enter the trade. What is the minimum account number? What's the minimum account you can recommend for beginners to fund? It depends on you. When I started my own, I was funding just $10. So you don't say, okay, just fund anything you can afford to lose. Fund $10, $5. Try it just be trying. When you are starting, don't pressure yourself. Don't let anybody deceive you that you need $10,000. Nobody needs $10,000. Do it your $5, $10, $50, $100. If you're a big boy that you can afford $1,000, do it $1,000, $10,000. Me, I have many accounts. This one I show you just one out of many accounts. So I've gone to that level to have that kind of account. You understand? So from there, do you need your account to be funded to start trading? If yes, what's the barest minimum? Okay. If no, what was that thing? What do you do? Now, you need your account to trade. You need to fund your account to trade. The barest minimum is like $5, $10. But you don't need to have money to become a trader. You need to fund to trade, but you don't need to have money to what makes you become a trader? By learning every day, by reading. As you're in this class, you have taken one step to becoming a good trader. Okay, so you don't need your account you don't need a account, or you don't need a live money. But then you have learned to a certain level, you can even be trading demo. I give you guys a challenge. Trade demo for 3 months. If you can consistently make profit after learning for 3 months, send me the login. If I see it, I'll fund you. I'll fund you $1,000. I used to do it. I've done it for some people. It's not a big deal. I can do it for you. But you have to show me that you are a consistent trader. Okay? And please do not take money from anybody as investment. Don't let that shit deceive you. Because you have learned beginner's class now. You feel like you have come. Then you're going to collect your uncle's money and your auntie's money. If he lost, you are on your own. I cannot teach you my strategy. It's called my strategy for a reason. Somebody asked me. They said my network is bad. I'm sorry. So that's all, guys. See you guys again. Don't worry. I will also think of creating another class like this again so that you guys can learn more. But for now, I'm so tired and exhausted, and I'm happy this has come to an end. Peace out, guys.